Good afternoon, everyone. Anthony Alaka with Torrey Hills Capital, and welcome to the Luca Mining webcast for May 13th, 2025. Hope everyone's doing well. Thanks for taking the time to join our virtual lunch. Very excited to bring you Luca Mining. This is our first call with the company, and we're very excited to have them on board. They are a Canadian mining company with two wholly owned mines located in the prolific Sierra Madre mineralized belt in Mexico. The company's Campo Morado mine hosts VMS-style polymetallic mineralization within a large land package producing zinc, copper, gold, silver, and lead. The Tahuehueto mine is located in Durango State. The project hosts epithermal gold and silver vein-style mineralization. Tahuehueto is a newly constructed underground mining operation producing primarily gold and silver. The company has successfully commissioned its mill and is now in commercial production. Both mines have considerable development and resource upside, as well as tremendous exploration potential. Companies listed on the OTC under the ticker LUCMF and on the TSX Venture under the ticker LUCA. It's currently trading with a market cap of only about 180 million US. They have a very strong balance sheet. They have potential to grow the resource through additional exploration. And obviously, the positive outlook for metals is going to help the company as well. We feel there's plenty of upside in the stock. With us today to discuss Luca Mining's operations and growth strategy going forward is the company's president and CEO, Dan Barnholden. Dan, it's great to have you on. Thanks for taking the time to bring our viewers up to speed on everything great that's happening with Luca Mining. I'm looking forward to the presentation. But before I turn it over to Dan, I just want to mention that I think everybody knows the format by now. If you have a question, just type it into the Q&A or chat box, and we'll make sure that it gets answered. So with that said, I'm going to turn it over to Dan Barnholden. Dan, the floor is yours.
Thanks, Anthony. Appreciate it and appreciate everybody tuning in. I am 10 months in this chair as of today, so I'm still learning the ropes to a certain extent, but we've made a lot of progress over the course of the last 10 months, really improved operations in a very material way. And the share price has done quite well. And so now we're moving into kind of a new phase of growth and a particular focus on precious metals. Obviously, with precious metals being at or near all-time highs, it's a very good time to be increasing and improving the focus at our mines on precious metals. And it's a great time to have a brand new gold mine coming online that we did in Q1 of this year. So just by way of a bit of background, prior to joining 10 months ago, I had spent the previous 20 years as a mining-focused investment banker, which means that I raised capital, I advised, I helped grow literally hundreds of companies, small, junior, mid-cap, and senior companies with capital raising and advice. So I have a pretty good understanding of what makes these kind of companies successful. And we are working hard to assemble all of the success factors at Luca Mining. I think we've done just that, and I'll walk you through exactly what we have done, what we've accomplished thus far, and what we intend to accomplish over the course of the next upcoming months and years. On the front page of the presentation, there are three keywords that are really the guiding principles for us creating value at this company, and those are optimization, exploration, and expansion. As mentioned, we have two operating mines. One is brand new, and so we are putting the finishing touches on the bringing of that mine into commercial production, which we did in Q1 of this year. At our other mine, it's been operating off and on for about 15 years. But we have brought that mine back into full production, invested in some optimization efforts, and now we have exploration efforts ongoing at both of our mines, which is the first exploration being done in over a decade at both mines. Assuming that exploration effort bears fruit, which we have every reason to believe that it will, there's a very meaningful expansion case at each of our mines that should see us in a position to grow our production organically by over 50% in the upcoming months and years. So as mentioned, we've got two operating mines in Mexico. One is our flagship asset, the Campo Morado mine. That's in Guerrero. It's in the south of Mexico. We fly into Mexico City. It's about a 6-hour drive due south on mostly paved roads. So that's a polymetallic mine, as Anthony mentioned. which means that it produces zinc, gold, silver, copper, and a little bit of lead. And then on the Tawa Hueto mine, that's in northwest Durango state, as Anthony mentioned, in the Sierra Madre Gold Belt. That's more of a traditional epithermal gold mine, right in amongst a fairly active mining jurisdiction, including some pretty large mines that people would know, including San Dimas, which is the First Majestic mine. We're a polymetallic producer, which means that we produce gold, silver. That's about half of our revenue stream. And then on the base metal side, copper, zinc, and a little bit of lead. That's actually fairly beneficial to us. It acts as a built-in hedge, which means that on any given day, we find that at least one of our metals is rallying. Obviously, gold sold off a little bit in the last couple of sessions, but the base metals complex has done quite well. So that, like I said, it ensures us and insulates us from major swings, and the trend has been up in all of our metals over the course of the last several months. Here's a snapshot of where we sit today. In 2024, we did around 58,000 ounces gold equivalent production. We expect that to grow by about 50% year on year, so 80 to 100,000 ounces gold equivalent production, of which 65 to 80,000 ounces will be payable. The balance goes to our offtake agreements and otherwise. So that's really the bottom line on the production: 65 to 80,000 ounces payable. We have de-risked operations. And what I mean by that is a lot of these smaller companies, they run into issues with permits, with capital. We are fully permitted. We are fully capitalized. All of the money required has been spent. Replacement value of these assets, we would estimate to be in excess of $500 million. So we are really benefiting from the money that is spent by the previous owners. Free cash flow estimate for this year, $30 to $40 million. We think that that's fairly conservative, given that those numbers were run at metals prices substantially below where we sit here today. We've got an opportunity to apply that optimize, explore, expand concept to our existing mines, growing the resource, growing throughput, investing in exploration, and then ultimately expanding. We also intend to be debt-free by over the course of the next couple of months. When I joined, we had $18.2 million in debt. We've paid almost $10 million of that off. Now we've got $8.5 million remaining in debt and a healthy cash balance of $21 million. So in a position to accelerate the debt repayment. And looking ahead, the goal of the company is to be a 200,000 ounce gold equivalent producer. We think that we can get about 2/3 of the way there through organic growth. And then we also have an eye towards M&A. We just hired a corporate development officer who has a mandate to look at acquisitions in the Mexican precious metals space. These are the catalysts that we think about that are going to be the concepts that help us to create value here with the company. Commissioning Tawa Hueto, as mentioned, we achieved that in Q1 of this year. Exploration at Tawa Hueto, first exploration program ongoing at Tawa Hueto since 2013. Last week, we put out more drill results. Those drill results have confirmed a lot of what we expected to find, basically demonstrating the potential to continue to mine here for at least a decade, finding new gold zones and really ramping up that efforts. We have every reason to expect that there could be a multi-million ounce deposit here, and our goal is to go out and find it. Over on the Campo Morado side, we are ramping up production at Campo Morado. When I joined, we were putting about 1,500 tons a day through the mill. The mill is built for 2,400 tons per day, so big organic growth potential there. The goal for 2025 is 2,000 tons per day. In January of this year, we achieved that, and we are consistently delivering 2,000 tons per day to the mill while also growing a stockpile. We're also in the process of optimizing that mill. The mill was originally built for 2 concentrate lines. We're moving that to 3 concentrate lines. Right now, at this moment, we produce a copper concentrate and a zinc concentrate. What we're going to do, and we're in the process of building this out, very modest capital outlay, less than a couple of $1 million, but we are moving to 3 concentrate lines: copper, zinc, and a bulk lead concentrate. What that means is we're going to get paid more for the metal that we produce because it's already comes separated, meaning we don't get penalized for, as an example, lead in our copper concentrate, and we'll get paid for all of those. We think that that's going to have an IRR in the multi-100% range. And then we're also going to recover more of the metals, and particularly focusing on recovering more precious metals from the concentrates that we produce. That's an effort that we are working on with Ausenco, the global mining contractor. And that's something to watch for this company as we continue to grow the gold recoveries. Exploration, again, first exploration being done here since 2014. The drilling is at this moment from underground. We are also in the process of mobilizing surface drills. The surface drilling is really going to focus additionally on the gold opportunity. We are into some zones, going to be drilling some zones that are materially higher on the gold front. Again, paying off that debt, we've got $8.5 million remaining. We're paying it off at a rate of about $650,000 a month. And we are looking at the opportunity to accelerate repayment. I would really like to be debt-free. I'm sure everyone knows the feeling of not owing anyone any money. Gives you a lot of flexibility on what you can do with the cash flow that you're generating.
Quick question, Dan, about the debt. Well, couple questions. Why, how long has that been in place? What was it used for? And are the terms favorable, or are you just trying to get rid of it because they're unfavorable?
So the debt is actually all owned to Trafigura. Trafigura is also our offtake partner. They own the smelters in Mexico. That debt came into place. There was originally about $50 million in debt about 5 years ago. The debt has been restructured, postponed, et cetera. It's only now over the course of the last year that we've been in a position to really repay the debt. Part of the reason that the terms aren't bad, I mean, the interest rate's only about 10%, but the reason why we want to get debt-free is it will give us a little bit of flexibility around how we deal with our off-taker, potentially some improvement in terms with the off-take agreements, but also will allow us to potentially do things like engage in high-value M&A, put our capital towards meaningful capital improvements, and ultimately, potentially down the road, look at return of capital to shareholders through things like buybacks.
Great, thank you.
You bet. And then lastly, as I mentioned, M&A. We think that there are many assets in Mexico that are underperforming that would look good in our portfolio that we could bring value to. We think that we've demonstrated expertise in operations, exploration, finance, government relations, including permitting and community relations. So we think that there are many mines in Mexico that are underperforming in one or more of these ways. And so if we're able to bring an underperforming mine into our portfolio to add those areas of expertise that we bring and that we've demonstrated, we think that that's an opportunity for us to bring value to our shareholders.
Well, one of the questions that came in was, and I think you kind of answered it, but maybe you might want to expand upon it. So what are you looking for in an acquisition? You're obviously looking for something already in production that you can fine tune and turn around. You're not going to look at something that's going to require a mine to be built, correct?
Well, that's an excellent question. And the way that we think about things is that there are many opportunities, and our focus is on Mexico. I think that there are opportunities like this elsewhere, but again, our focus and our area of expertise is Mexico, and we've demonstrated an ability to turn assets around in Mexico. But we think that there are many assets that trade at, even in this market, trade at less than replacement value. Okay, so both of our assets, for an example, we think that it would cost us over $500 million to replace our assets, and yet our market cap's only about $200 million. So we're trading at about 40% of replacement cost. We think that it will be possible for us to buy assets that are operating cheaper than it would be to build. In addition, as I mentioned earlier, when you bring development assets into your portfolio, And you can see this in other companies that have bitten off more than they can chew on the exploration, or sorry, on the development front. You bring those risks that I talked about that I really want to avoid in this company, and those risks are capital blowouts, not ever being able to raise enough money to actually properly build your assets, and permitting. Everybody can name a story where it was supposed to be permitted in a year and it took 10 years. I don't want to bring that risk into our portfolio. So very much the focus is on things that are permitted, ideally things that are in operations, things that are in operations but haven't been invested in properly. And remember, Mexican mining has been in the dumps for the last 6 years with the previous government administration. And so there are lots of assets that haven't been well looked after over the course of the last 6 years. We think that we can bring those into our portfolio. We can invest the cash flow that we are generating at our existing mines into a new mine and really create value through those 5 areas of expertise that I talked about.
So the goal too is to stay in Mexico then as well, correct?
Well, we've got an 18-person office in Mexico City. We're very well connected. One of our directors is the brother of the CEO of Fresnillo, so very well connected in mining centers. We're pretty sophisticated in how things work in Mexico politically and from a community standpoint. We've got an exploration team. And so what I would like to do is really leverage the expertise that we've already developed in Mexico rather than going to somewhere like Brazil or Peru or Colombia, which would require us to start over again.
Yeah, makes sense. Thanks.
So I just talked about these catalysts that we're focusing on, these 7 different things. Assuming that we're able to execute on those 7 items, what does that get us? We have 2 permitted producing cash flow generating mines. That's really the foundation for us to grow this company. Those mines have development upside, resource growth upside, and this optimization effort that we are ongoing at both mines. We'll have a clean balance sheet according to the debt repayment schedule by mid-2026. But again, I'm looking at ways to pay that off early. And then we'll have 2 aggressive exploration programs. Both programs will have an underground component and a surface component, very much focused on near mine resource growth, and finding higher grade stuff, which should fall right to the bottom line sooner than later, as well as demonstrating the potential to extend mine life and find bigger mines on these sites. We're able to deliver that company to the market. We think that there's very material upside from here. So that's kind of the elevator pitch, the high level pitch. We'll dive down, Anthony, into the assets here a little bit. Won't take up too much time because I do want to get to some questions, but just take a high level examination of each of our mines. So starting with Campo Morado, it's our flagship asset. It's in Guerrero. Again, it's about a 6-hour drive due south of Mexico City. It's an underground mine focused on VMS-style mineralization. VMS means volcanogenic massive sulfide, which means that it's polymetallic, zinc, copper, gold, silver, and a little bit of lead. You can see the grades here, 4% zinc, almost 1% copper, 1% lead, about 120 grams silver, and 1.7 grams per ton gold. That gold component, we are starting to focus on improving that. In fact, one of the deposits that is known to us as part of the Campo Morado mine is in excess of 2.2 grams per ton. So if we can continue to drive higher grade gold grades into the mine plan, that should be a very material impact, positive impact on our cash flow. 10 years mine life, $500 million replacement value. There's a 2,400 ton per day mill on the site there. Again, when I joined, we were delivering about 1,500 tons per day. The budget calls for us to deliver 2,000 tons per day to the mill, which we are doing. We've achieved that. And so over the course of the year, we will continue to drive that up to full capacity of 2,400 tons per day. That's where the continued growth is expected to come from. This year, we'll do 54 to 64,000 ounces gold equivalent production. The infrastructure there is everything that you would expect in an operating mine, including grid power. I think we pay 7 cents per kilowatt hour, which is obviously substantially cheaper than diesel gensets. One of the opportunities that we're focused on right now, we generate a zinc and a bulk copper con. That's just two. There is an opportunity that we're working on now to go to three concentrate lines, which would be a zinc, copper, and bulk lead con. What that'll do is it'll improve our recoveries. It will also improve our payability. So we're going to get more metal out of the ore that we process, and we're going to get paid more for it. Because, as an example, we're not going to have lead in our copper con. They're going to be discrete. Means we won't get penalized with the copper con for having lead. In fact, we'll start to get paid for lead for the first time, really ever at this mine. We're going to invest about at least $15 million. This sustaining capital is mostly underground development. Exploration, $1.3 million. I can tell you that we've already bumped that by $2 million. We're generating more money than we expected at the beginning of the year because of where cash flow, because of where metals prices are, more cash flow, and we're regenerating a lot of that money into exploration. So we're going to have a much larger exploration budget than $1.3 million at Campo Morado this year.
One of the questions is, how are you calculating your all-in sustaining costs? Are there any metals that are holding you back at that property?
None holding us back. Our AISC about $2,300. And the reason why it's so high is actually because we're a polymetallic mine. When the gold price goes up, our AISC goes up because as we convert all of our metals into gold equivalent, as the gold price goes up, as an example, it takes more pounds of zinc to deliver an ounce of gold. So
Hmm.
you can see it's and so we really, because we're polymetallic, we try and focus investors on our cash flow generation. Obviously, when the gold price goes up, our gross cash flow and our net cash flow goes up, but the appearance of our rising costs is something that obviously doesn't help us. So what we try to do in our scenario is really just focus investors on the cash flow potential of this company.
Perfect. Thank you.
You bet. This is some of the work that we've been doing, particularly on the copper recoveries. You can see that we've improved copper recoveries every quarter for the last several quarters. This is going to be an ongoing effort. We think that we can ultimately get this to probably close to 18%. Again, what that means is that we get paid more for the metal that we produce, and we produce more metal from the ore that we process. We're in phase 3 of this Campo Morado improvement project, leading to that copper and lead separation. That should have an incremental $5 to $10 million in cash flow potential to our bottom line. And then as we move into 4, we start to look at the gold potential. And right now we're only recovering about 30% of the gold. Opportunity, obviously, for us to grow that very substantially. And so if you think about the gold opportunity, you think about higher grade gold being processed, recovering more of it, and obviously gold at or near all-time highs. That's really the blue sky potential, not included in any of our projections, not included in our $30 to $40 million in free cash flow this year, but really where the potential growth and part of what drives us to become $1 billion company here is going to be that gold potential. So as we think about exploration to the north here, these higher altitude deposits here in the red, that's where we're going to be targeting our surface drilling, and really in the it's not particularly clear because the writing's small, but in the bottom right-hand map, you can see the blue area here is where we're mining. Up to the north and northeast of the blue mining area is a deposit called the Reforma. That has gold grades up to 2.2, 2.3 grams per ton, almost 50% higher than what we're mining now. And that's where we're going to start to explore from surface starting next month.
What percentage of the property have you actually explored?
Oh gosh, like 10%.
Wow. Okay.
So real exploration potential. And the cool thing, we actually had a guy in the office yesterday talking to us about AI applications. We've got so much technical data that was generated in the late 90s and 2000s. There's been so much technological advance in exploration over the course of the last 20 years. We've got, surface and structural mapping, almost 30,000 soil samples, almost 600,000 meters of drilling. What we're going to do is we're starting to look at applications of artificial intelligence to generate more high quality drill targets for us. It's not like there's a shortage of drill targets, but we just think that this is a tool that wasn't applied 25 years ago that we can potentially improve our targeting. Right now, we've got 38 exploration targets. We distilled that to a top 10. 4 of those are within our mining claim boundaries, which means that we don't need a lengthy permitting process. In fact, we're going to be drilling from surface literally any day. The surface drills are being mobilized. We hosted some research analysts to site 2 weeks ago. They saw where the drill pads were being built, and so like I said, any day we're going to kick off again that gold-focused surface drilling. Moving over to Tawaweto, our secondary mine. This is a brand new mine. We just announced commissioning in Q1 of this year, 100% owned. It's a classic Mexican Sierra Madre epithermal gold silver. Comes with some incremental breccias, which are rich in base metals. So there is a base metal component, but largely about 70% of the revenue here comes from gold and silver. Works out to about 4 grams per ton gold equivalent. Replacement value about $100 million. Again, 1,000 tons per day. This one's going to do 31 to 36,000 ounces gold equivalent. This is on diesel genset, so the power is a little bit more expensive. We do produce a zinc concentrate with a lead concentrate where most of the precious metals come. You can see we're planning to invest about $13 million here. A lot of that is on the completion and the commissioning, but also big exploration budget. And again, this exploration budget is expected to drill. I do believe that there's a multi-million ounce deposit hiding somewhere here at Tawaweto. You can see here we're into the side of a mountain. We are mining on the right-hand side, levels 12, 14, level 20 portal. We're moving downwards and further into the mountain, and we are continuing to find the veining that we would expect. The logistics of building this was difficult, but now that it's built, the logistics actually work very much in our favor. Anything that comes out, gravity does its job, brings the trucks down without burning a huge amount of diesel fuel to the crushing circuit, the processing plant, and then tails further down into the valley. Why I like to show this picture is it gives you a bit of a sense of what we're dealing with. The mining here in the top right picture, we mine right in the middle at the Creston vein. That's where the photo that I just showed was. We're mining on the Creston vein, the Perdido vein. On the other side of the mountain, we've demonstrated veining on the other side. We believe it's all the same veins. There's a 500-meter undrilled gap there. We believe that the veins actually travel all the way through the mountain and that there's an opportunity for us to grow the resource very substantially by drilling both from underground and from surface into this prospective gap here. So what are we going to do on the drill front? We're going to be stepping out along strike, north and south, determining the vertical extension to depth. There's new veining also. There's 14 known veins on site. The resource estimate that we have now only includes 5, so there's an opportunity to move further afield from where the actual mining is right now.
What is the elevation someone's asking of Tahueto?
Oh, I think it's about 1,000 meters. It's not high.
1,000. Yeah.
Yeah.
Great. Thank
you. Elevation doesn't impact us. It's lower in elevation actually than Campo Morado.
Got it.
So that's the story of the assets here. The corporate statistics, you can see we got 250 million shares out, trading at 90 cents US today, market cap of about 350 million Canadian or 220 US. We hit $1.60 Canadian 2 weeks ago. We've pulled back a little bit. A big part of the reason why we ran to $1.60 is we were included in this selective global copper miners index, which brought 9 million shares of incremental buying into the story. That obviously impacted our market. I think we've normalized here around $1.25 to $1.35, and I think we're consolidating here. One thing that has been a big change for us is we've actually knocked out over the course of the last month or so almost all of the dilutables. They are now expired. That generated an awful lot of cash for us. We now have $21 million in cash. We've got $8.5 million in debt, puts us in a very good position to repay that debt early. Only about $10 million in, 10 or 11 million dilutables remaining. That's going to generate about $6 million Canadian, and then there'll be no overhang left. We've got two research analysts covering us. Again, I mentioned that we had a research analyst site visit 2 weeks ago. On the return, this Ventum analyst that covers us bumped his target price from $1.50 to $2.05. Maxim is a group out of the US. They've got a $1.75 target price on us. One of the big things that I'm focused on, and I've been going to conferences and doing lots of road shows, is growing this institutional investment component of the story. Obviously, this index inclusion was a big piece, but really no material institutional investors to speak of. And I believe when the institutions start to show up, there's going to be another leg up here in the story. Board of directors, some very impressive people. Phil Brummett and Neil O'Brien, both longtime Lundin Mining guys. Neil was Lucas Lundin's right-hand man for 20 years. He was the VP of exploration for Lundin Mining. He really grew Lundin Mining from a single asset Swedish zinc mine to a global base metals powerhouse. So he's a big believer in what we're doing here. Ruben Ortega, he's the brother of the CEO of Fresnillo, so very well connected politically in Mexico. And then David Rhodes, some people may know, he's the chairman of Empress Gold Royalties, also a very well-known mining financier. He's our chairman. Peter Damouni, a London-based mining financier, and Rory Godinho, who is a Vancouver-based securities lawyer. On the management team, myself, finance background, really have put this team together and financed the company in a way that positions it for success. Ramon is Miami-based, but grew up in Mexico. He's kind of our president and country manager for Mexico. Paul and Adam joined us over the course of the last 3 or 4 months. Paul is our VPX, highly successful track record of finding gold. Adam, previously a research analyst and a site and a fund manager. He's on the corporate development and investor relations side. And then I just hired Ramon Mendoza at the beginning of this year. Previous to joining us, he had been the VP of Technical Services at First Majestic for 10 years. Lastly, Israel and Lisa, very experienced on the accounting side for Mexican mining companies. So what's next for the company? Continuing this ramp up at Campo Morado, undergoing this optimization program, which will increase the grades and recoveries. Ramp up of Tawa Hueto. Again, that just came into commercial production last quarter. Still lots of room to grow the production profile there. And we're increasing our revenues and ultimately our cash flow. We think that we're in the midst of a very substantial re-rating here. Right now, we traded at almost a 20% free cash flow yield. We think that that'll come down as a consequence of our share price going up. Upside potential, we're going to double the production. I expect to be able to produce 120,000 ounces plus. And that should put us in a position to make an acquisition. Again, the target for this company is to do 200,000 ounces gold equivalent production. We think that about 2/3 of that will come from organic growth, and then the final third will be a consequence of an M&A transaction. Hopefully, we make between now and the end of the year. That's it.
Great stuff. We have a lot of questions in queue. I don't think I've ever seen this many questions, but we're going to get to all of them, Dan.
Okay.
So if anyone has any additional questions, type them into the Q&A or chat box, and we'll make sure it gets answered. Um, how much can the mill at Tahoe Hueto handle in terms of tonnage per day? Can it handle additional tonnage? I mean, you said you were starting with 1,000, correct?
So it's built for 1,000 tons per day. There's actually there's a 750 ton per day. There's two ball mills there at the mill. There's a 750 ton per day ball mill and there's a 450 ton per day ball mill. Um, Obviously, that sums to 1,200. So there is potential to grow the throughput at Tawaweto to about 1,200 tons per day. Obviously, it's not going to be available 100% of the time. I think realistically, we could expect to do about 1,100 tons per day consistently at Tawaweto, which would be an increase of about 25% over the 820 that we're doing when you multiply 1,000 times 82% availability. So the opportunity for us is to grow the throughput and also grow the availability. I think that 82% isn't great. This mill should be available 90+% of the time.
Great. Regarding offtake agreements, how is the price determined? Are there discounts from market price?
Yeah, there are. It's different for each metal. We get paid between 70 and 80%. And there's, look forwards, look backs. And in my next career, I want to be a metals trader. These guys have a monopoly. They own the smelters. And yeah, all of our metal is committed at this moment to Trafigura. Um, we are looking at ways to improve our lot in life as it pertains to our offtake agreements.
Great, thank you. Can you enumerate the reasons why you believe the Mexican mining sector has improved under the current government compared to previous administration?
Well, I don't know the political leanings of your audience here, Anthony, but I think that Donald Trump has actually had a lot to do with it. I think that in Canada and in Mexico, obviously I'm based here in Canada, we're starting to see the reality of building building industry in countries. Both Canada and Mexico have been traditionally left-leaning. Left-leaning tends to not be supportive of resource development. And yet, with the tariffs, with some changes in policy, I think that it's focused the Mexican sector on the importance of permitting new mines, the importance of reducing barriers to exploration and so forth. And so, a big part of what has happened, obviously, there was a change in the administration. A new president came in. She was more constructive as it pertained to mining than I think most people expected. And then you add on to that what I call the Donald Trump effect, and resource development has become front and center for both Canada and Mexico as people realize that countries need to exploit their resources to build wealth for these countries, to build jobs for these countries, and we're seeing it happen in real time in Mexico.
That's great. Um, Someone's asking if Ramon was formerly with GS Silver.
GS Silver. Yeah, Ramon Mendoza, I'm not sure. I don't believe so. I know that Ramon Mendoza spent his prior 10 years at First Majestic. I'm not sure where he may have been prior to that.
Okay. Um,
He
so
spent
this
also
was
2 years as a consultant at Entech. But again, GS Silver doesn't ring a bell for
doesn't
me
ring a
for
bell.
me.
So someone is asking, you probably won't answer this, but are you currently at a CDA with any potential targets? I don't know how much of that you can talk about, but you know,
Um,
you feel confident that something can happen in 2025?
Look, we're pushing because we think that it's still a bit of a buyer's market in Mexico.
Yeah.
Um, we're not competing for, I mean, in the last 12 months, you've seen Mag Silver get bought. You've seen Silvercrest get bought. You've seen Gatos get bought. We're not competing at that level, right? Um, uh, Endeavor Silver made an acquisition in Peru. Um, People are looking to buy things. We're looking to buy things, but we're competing at a different level. We're looking to buy something that might cost us, between 80 and $200 million. Um, do I think we're going to make an acquisition? I do. Do we have something, are we going to announce something in the next month? No, we're not.
Yeah, that's fair. By the way, the GS silver they were talking about was Guanajuato silver.
No, my CFO Lisa Day was previously at Guanajuato Silver, but Ramon was not there.
With respect to the two analysts covering Luca, do you think their stock price estimates are too low? Given your extensive banking financial background, what do you think is a fair price for the company?
Oh gosh. Look, I think that if we're able to execute on the 7 items that I put up on the board, I think that I don't see a problem with us being a $500 million Canadian company, which is about $2 a share.
Yeah. It seems you have many drill holes to focus on. Can you take some more of the cash to go for drilling versus paying down debt so quickly to get more positive results for shareholders for more production?
Yeah, again, there's more reasons than just to pay off the debt for the sake of paying off the debt. We're not really capital constrained here, so drilling is absolutely a focus. As I mentioned, we extended our drill budget by $2 million 2 weeks ago. We didn't find that to be material, so we didn't announce it. But you can expect that we are going to be drilling evergreen from surface and from underground. There's already some talk about adding a second surface drill at Campo Morado. Um, Look, I do believe that the biggest single opportunity for us is to drill into the high-grade gold zones that are known and start to demonstrate the gold potential at Campo Morado. We will do that. We won't raise money to do that, because we're very cognizant of dilution. But the excess cash flow above our budget that we generate, I would say a very meaningful portion of that will go into drilling. Again, we're in a much better financial position at this moment than we expected to be at the end of 2024 when we were doing our budgets. And so extending drilling budget allocation is a no-brainer.
Which is one of the kind of tied to one of the questions. Will you have to go to the market for any capital, or will all your expansion be done with cash flow? I assume if you make an acquisition, it'll probably be equity. Um,
In
but
the status quo, we will not be coming back to market. I tell people that you are more likely to see a share buyback than a share issuance in the status quo.
gotcha.
If there is a transformational acquisition that we have an opportunity to make, we may change. That may require us to go to the market. There's a very permissive market out there right now.
Hmm.
If we had an acquisition target that in our opinion was accretive on a per share basis, that generated more cash flow per share, that generated more um, production ounces per share, et cetera, then we would make that acquisition. If it required capital to complete the acquisition or capital to improve the operations to bring them into full production, we're confident that that money would be available to us at this moment. But look, I have personally bought 3.5 million shares in the market or in offerings over the course of the last year. I don't take the dilution lightly. We're not going to issue stock just for the sake of issuing stock. Our balance sheet is in great shape for a company our size. We've got a very modest amount of debt. We can afford to do the capital improvements at our existing mines. We can afford to drill them, and we can afford to pay back our debt. There's no reason why we would need to raise capital under the status quo.
Yeah, great. Any arsenic?
No.
No. Where is the mill versus the location of the mines?
Um, 500 meters.
500 meters, yeah. Any,
Both mines. I mean, they're complexes. We're not toll milling. We're not trucking hundreds of or dozens of kilometers. I mean, these are mines and mill complexes that are proximate to one another.
yeah. Any security issues in either of those areas?
No, look, I mean, Mexico has a well-earned reputation for being a somewhat difficult place to work. We understand that. We've got a very experienced Mexican team. Our head of security is the son of a very prominent military officer. So we understand the comings and goings of different individuals and organizations in Mexico. We're not involved, obviously, with any of that, but we are very cognizant, and I think we have a very good strategy for keeping our people safe. Obviously, there's been some big issues in Sinaloa. We're not in Sinaloa. We transit through Culiacan, but again, we don't leave the airport there. Um, we're cognizant of it. It's not an issue for us. We understand it. And obviously, as I like to say, we stay in our lane and we avoid problems.
What is the ACG grade at Murado?
The ACG grade. Uh, I'm not. I'm drawing a blank on what ACG could stand for.
Yeah, Tony, if you could please expand on that. What is the anticipated production of gold equivalent ounces for the year ahead, and what's the long-term production target? So you mentioned earlier that the long-term production target was going to be 200 million, correct? Do we have
200,000. 200,000.
200,000? I'm sorry.
That's the goal for the company. That's
The
my
company, correct.
that's my goal. I think that a 200,000 ounce producer has $1 billion market cap. Our goal is to be $1 billion company. For this year, for 2024, we did 58,000 ounces gold equivalent production. This year, we're going to do 80 to 100,000 ounces, so an increase of about 50%. Payable will do 65 to 80,000 ounces. The difference there being what the smelter takes. The goal is to get to 200,000 ounces. So for 2025, 80 to 100,000 ounces of production. 26, I would like to push to 100 to 120. 27, I think that these assets have the potential to do about 130,000 ounces gold equivalent production from the status quo with modest capital investments. To move beyond that, it would need transformational capital and basically new discoveries at our existing sites or an acquisition.
Right. And when he said ACG grade at Murado, he meant average grade.
Oh, average grade. Well, again, it's a polymetallic deposit. Here's the resource grade, 4% zinc, 0.8% copper, 0.93% lead, 120 grams silver, and 1.7 grams per ton gold. Again, we're starting to explore and get more aggressive, particularly on the gold front. We're going to be exploring in the areas that we think are north of 2 grams per ton gold. So that's a pretty meaningful increase in the gold grades that we're focused on.
Speaking of which, how much CapEx are you planning for this year and next to be able to tap into approximately 70% of the gold that you are targeting now, previously not mined?
Well, the sustaining CapEx at Campo Murado is about $13 million. A large portion of that is going to go to underground development.
Great. And what's the measured and indicated total? That's the last question.
Uh, M&I is across here is
Okay,
16.6 million tons M&I, including these individuals. So 700,000 ounces gold, 1.2 billion pounds of zinc, 200 million pounds of copper, 62 million ounces of silver.
great. Perfect. That's going to do it for the questions. I want to thank Dan Barnholden for joining us today and bringing everyone up to group on the group to speed on Luca Mining. Obviously, he's a big shareholder in the company. You mentioned earlier he cares about dilution. I think they're doing everything right. And obviously, with gold and silver and metals doing what they're doing, if you feel like the long-term outlook for metals is positive like we do, it's definitely a great time to be looking at the company, especially with its market cap down here. Uh, Dan, before I wrap it up, do you have any parting words for our guests?
No, I mean, I think I hit all the high points. The only thing I'd sort of reference is you mentioned right at the end there. We've got very, very high leverage to improving metals prices. So if you believe that the metals complex is going to continue to rise over the course of the next weeks, months, and years, because we are kind of a bit of a higher cost producer, every $100 in the gold price, a big portion of that falls right to our bottom line. $100, it's like $6 million to our bottom line, $6 or $7 million to our bottom line. And that's very material. So that's like $100 is like almost a 20% increase in our cash flow. So a high beta. You can see that on our share price performance from the beginning of the year. Obviously, the gold price went up about $600 or $700, and our share price went up by 3 times.
Yeah, it's very sensitive to the gold price. So if you think gold is going higher, this stock will certainly benefit from that. So we're going to wrap it up here. Thanks, Dan, for coming on and putting this on everybody's radar if it wasn't on there already. In the meantime, you can get additional information on Luca Mining at the company's comprehensive website, lucamining.com, including details on the company's current mines as well as